Welcome to Thoughts on the Market. I'm Cosmo, and today we'll be talking about 2021, in fact, the decade to come, in the context of the stock market and of governments. First of all, I'd like to say I'm not a financial advisor. This is for entertainment purposes purely. So, as we know, this year has been unprecedented. We've had a pandemic which has had an enormous impact on global financial markets. Government spending is at all-time highs. Sovereign debt has absolutely exploded. The stock market had an enormous crash in the middle of March, and that was then followed by an even more outstanding recovery and all-time highs for all those stocks. This year's been especially good to the EV sector, all electric vehicles, to in fact batteries, green energy, all that concerns industries which people think will continue to thrive in the years to come. I believe that there's been a bit of a change in dynamics in the stock market. It's become much more accessible through applications such as Robinhood and all these free brokerages, which essentially allow every single member of the public to trade with almost no price to pay for it. Trade, invest. And actually, this has enormous implications for the stock market as well. I think that issues such as the stimulus package and the stimulus checks have enormous implications for especially the US stock market. Now, there's some turmoil in regards to what the size of the stimulus checks should be in the United States. President Trump suggested it should be $2,000 and threatened to veto, or implied he might veto the stimulus package. This is something Democrats claim they wanted, and so there's all sorts of a fuss around it. But I think that once it passes, because it's more of a question of when than if, once it passes, a lot of these people, a lot of the citizens of the United States that are applicable to receive these checks will actually just invest it or, buy their next summer trip. And so this enormous spending, especially in the more developed economies in which sovereign debt is less of an issue, and so there was higher spending or higher sustainable spending, public spending is going to be much larger. Not only because of the psychology of people being restrained from being able to do that through lockdowns and restrictions and the fear of the pandemic, of course, but also simply because there's much more money in the economy. Now, another layer of insecurity that's added on to the stock market because of this is the issue of debt. It's my understanding that approximately 25% of all currency in circulation has been printed this year. Now, this is an enormous crisis, I think. I think it calls for a deep public evaluation of the issue of sovereign debt and of the possibility of especially emerging markets, emerging economies defaulting on their sovereign debt. Because this increase of sovereign debt, I mean, it only furthers the extent of what the fourth wave of debt, so that started in 2010s, will bring, what the ultimatum will be. This brings a lot of uncertainty around what the future holds for many economies, as well as the actual growth of markets. Even Warren Buffett commented just recently on the possibility of market growth slowing down tremendously just because of this issue of money being thrown around with often not enough of a justification for it to hold its value. So economies will have implications on the stock market. It won't just be the change in dynamics in the public's accessibility to the stock market. Now, on top of this, there are a lot of industries that have been really hurt by the pandemic, just as there are others that have been absolutely boosted by it. Things like tech, EV, some aspects of the energy sector. And then of course, in the negatively impacted financials, retail, brick and mortar. But what does this mean for the future? What does this mean for the next 9 years of this decade? Quite frankly, there's no real answer to that. But one could expect that restaurants will recover, that all of this government spending will eventually have to go somewhere, that once the public is unleashed and the pandemic is solved, when vaccines are sent out to the extent to which economies can open up again, and truly, I think restaurants, bars, all the sorts will have a very surprising recovery simply because spending will go up tremendously. There's been a considerable wave of saving in these lockdowns around the world. And so what that means is a lot of the money's been invested in the stock market, as can be seen with the enormous bull run since March. But a lot of it is excess. A lot of it is going to be spent on holidays, and this certainly applies to middle and upper middle class, of course, lesser to the working class and the people negatively impacted by the pandemic, and it can't be undermined that this exists as well. And in fact, the issue of wealth disparity itself provides a bit of afterthought to what the stock market actually represents and what it will continue to represent in the decade to come. I think the issue of accessibility brings with it its pros. So the fact that more people can invest and trade and do all that, and so the economy is slightly more circular because you have more people involved in the actual judgments of values of these economic inputs and outputs. But of course, it means that the people who can benefit from this will benefit disproportionately to the people who can't even get access yet. And so the pandemic, along with this weird shift in dynamics in the stock market, all further the issue of wealth disparity. Now, in terms of stocks to watch in 2021, stocks to watch in this decade to come, now there is a bit of speculation around a potential market correction in the months to come. Some have even said that inflation rates will explode, and so stock markets will stumble as a consequence. And some are calling out for the roaring 20s to come. So there are a lot of different takes on what can happen. I think that a safer approach would be to take a look at all the recovery stocks, because though a full recovery we don't know is attainable yet, a partial recovery, and one which could benefit energy, leisure, restaurants, etc., is inevitable. E-commerce has really thrived during the pandemic, and so there's been a lot of media attention, a lot of press attention to that movement. But I don't think that big winners will continue to grow in the same rates that they have this year. There might be some form of stagnation as people accept their roles in these market dynamics. However, smaller e-commerce websites and platforms might actually have an enormous upside simply because of this change in dynamics and of these e-commerce leaders really imposing the power and accessibility to e-commerce into these markets. Be sure to watch stocks such as Tesla, which has recently been included to the S&P 500, so that will certainly still catch the eye of media in the year to come. Be sure to watch green energy, as more people get access. As if at all this wave of stimulus checks arrive, especially in the U.S., people will invest in familiar stocks, in Bitcoin, in Tesla, and Apple, and Amazon. Not that I'm saying that they have enormous upsides to come, but I think that the cryptocurrency market now has a lot of media attention, have a lot of investment and hedge funds buying into them, and so they can no longer be regulated to the same extent. And even if they are, Bitcoin is now a market leader, worth about $600 billion as we speak. And so there is enormous upside to the crypto market. Whether Bitcoin still has room to come, I'm not sure. I don't think it'll be accepted as gold or as the alternative to gold in this year, but certainly in this decade, as we move slowly to more online platforms, etc., I think it will continue to be more and more accepted as the standard for online purchases. But again, when you have larger industry leaders with such enormous growth, it has to end at some point. Otherwise, it isn't sustainable. It market growth has to be somewhat proportionate to reality, and if it isn't, then a correction is imminent. And for that, I think Bitcoin might not be the cryptocurrency to watch. Maybe smaller cryptocurrencies could be more interesting. I personally have little to no interest in cryptocurrencies, and maybe that is to my downfall, maybe that is to my benefit. Nobody's to say. Well, anyway, stay safe. The pandemic still exists, the markets are still volatile, and Happy New Year to all. Thank you very much. This has been Thoughts on the Market. I look forward to seeing you soon.